Welcome back, everyone, to the Malaysia Money Matters show. It's the 1st of May, 2025. Happy Labor Day.
Happy Labor Day.
Today, we're going to jump straight into a pretty concise look at some recent financial and business news.
Sounds good. We'll cover things here in Malaysia and look internationally too, right?
Sure.
Focusing on the impacts.
Exactly, what it might mean for you. So let's start local. What's been catching your eye on the Malaysian company front?
Well, first up, maybe DXN Holdings. Analysts seem quite positive looking ahead.
Oh, yeah. What are they saying?
They're predicting continued earnings growth into their fiscal year 2026, maybe around 12% year on year, which is pretty solid.
12%, wow. Where's that growth coming from mainly? Is it domestic?
Actually, it seems largely driven by their performance in Latin America. Markets like Peru, Bolivia, Mexico are strong for them.
Interesting. Latin America.
Yeah, and they're also making headway in places like Brazil and Argentina.
Yeah.
This comes after a decent FY 2025 net profit and revenue, both up nearly 6%, pretty much in line with what people expected. Plus, they've declared a dividend, 3.7 sen for the year, and analysts are saying the stock's trading at quite an attractive valuation right now.
Right. Sounds positive overall, then.
It does, though. I
Yeah.
always wonder about relying so heavily on specific international markets, potential risks there.
True. Always a factor. Okay, who's next? CIMB Group Holdings. Their stock saw a bit of life recently.
That's right. Yeah, it hit almost a one-month high. That followed some strong earnings news from their Indonesian unit, CIB Niaga.
Ah, the Indonesian connection. How strong were those earnings?
Net profit was up over 7% in the first quarter. Pretty good numbers.
Okay.
But, there's a but, analysts are pointing out the Indonesian rupiah. Well, it's been weakening against our ringgit.
Ah, the currency impact. So that could dampen the contribution when they bring those profits back.
Exactly. It could sort of dilute the positive effect on CIMB Group's overall bottom line. So the thinking is, maybe the real focus for CIMB's growth needs to be back here in Malaysia.
Boosting local operations.
Yeah, specifically areas like wholesale banking and trying to get more fee-based income. That might be key for them going forward.
Makes sense. Something to watch. Now, Carimin Petroleum. They secured some work.
Yes, a work order from Petronas Carigali. It's for anchor handling tug supply services.
Okay, standard offshore support vessel work.
Pretty much. The contract's for 235 days, with an option for another 30. They didn't disclose the value, though.
Right, typical. But still, a contract with Petronas Carigali is always a good sign.
Definitely positive for their order book.
Okay. Eco World International. Sounds like they're making some changes.
Big changes, yeah. They're planning to expand into the Malaysian property market, which is quite a shift for them.
Weren't they focused on the UK and Australia primarily?
They were, but it sounds like they've faced some headwinds in those markets. So now they're looking closer to home.
Right.
And as part of this, they're proposing a name change to EWI Capital. And they're ending their collaboration agreement with Eco World Development Group.
Ah, the agreement that kind of kept them out of each other's territories.
Exactly. That deal restricted EWI from Malaysian projects and Eco World Malaysia from certain overseas ones, and covered brand licensing too. That's ending.
Why the shift now? Just the headwinds overseas?
That's part of it, but they also cited Malaysia's stable economy and maybe more favorable accounting rules here as reasons.
Interesting. Any other fallout?
Well, 2 board members from Eco World Malaysia have resigned from EWI's board, presumably to avoid potential conflicts of interest now that they might become direct competitors here.
Makes sense. A strategic pivot indeed. Okay, HCK Capital Group is looking to raise funds.
Yes, quite a sum. They've lodged documents with the SC to set up a Sukuk Wakalah program, up to RM 2 billion.
2 billion, wow. Can you quickly remind us what Sukuk Wakalah is?
Sure, it's basically an Islamic bond structure based on an agency agreement. This program includes senior Sukuk, which have an AIS rating from MRC ratings, and also some unrated perpetual Sukuk.
And the purpose of the funds?
Primarily for Sharia-compliant intercompany financing within the HCK group, investing in Wakalah assets and then channeling funds internally.
Got it. Allows them to manage capital within the group, Islamically compliant?
Precisely. We also see HCK Capital launching this RM2 Bil Sukuk program, basically, to invest in these Wakalah investments and advance funds to itself via Sharia-compliant interco financing. It's all about internal funding structure.
Okay. And there's an IPO coming up, too.
That's right. Hartanah Kenyalang, they're a construction services firm based in Sarawak.
Okay.
They're opening IPO applications for their listing on the ACE market. The offer price is 16 cents per share.
And how much are they aiming to raise?
Up to about RM 31.74 million. It's a mix of issuing new shares and offering some existing shares for sale. Investors could end up holding up to 32% of the company.
And the use of proceeds? Usual stuff.
Pretty much. Working capital, buying some assets, excavator, software, and paying down some debt. Listing is planned for June 9th.
Okay, one for investors interested in the construction sector and Sarawak to look at. Now, a bit more concerning news regarding K&M Group.
Yes, unfortunately. Their external auditor has flagged what they call material uncertainties in the latest audited financials for FY 2024.
That doesn't sound good. What's the specific concern?
It raises serious doubts about their ability to continue as a going concern, basically whether the company can survive.
Why is such a strong warning?
Well, their current liabilities are way higher than their current assets by about RM 450 million. Plus, they've defaulted on significant loans, around RM 1.33 billion.
Oof, that's serious. What are they doing about it?
They've asked for another 6-month extension to submit their regularization plan to the authorities, and they're planning to sell off several key units, including their German subsidiary, Deutsche K&M. It's a tough situation.
Definitely highlights the pressure some companies face. Okay, shifting gears a bit.
Yeah.
Labuan IBFC, something about carbon credits.
Yes, they're getting ready to publish a carbon credit circular next year.
Circular, what does that signal?
It signals they're preparing the groundwork for a digital carbon credit exchange based in Labuan.
Interesting. So facilitating the trading of carbon credits digitally.
Exactly. The goal is to provide regulatory clarity for businesses wanting to get involved in carbon credit transactions. It fits into Malaysia's wider climate commitments,
Right, providing a regulated platform for that market could be significant.
Oh.
And staying with government policy, big news on eggs.
Ah, yes, the egg subsidies. Effective today, May 1st, the government is ending the price control on eggs.
Ending it completely, just like that.
Well, it's part of a phased approach to subsidy retargeting. For now, the subsidy is being reduced to 5 cents per egg.
Okay, so not fully gone yet.
Not yet. The plan is to completely remove the subsidy on August 1st, 2025. So a little over a year from now.
Why the change? Costs?
The government cited the sustainability of the local egg industry and, yes, the country's finances. They mentioned spending nearly RM 2.5 billion on egg subsidies since February 2022.
That's a huge amount. But what about the impact on, the cost of living? Eggs are a staple.
They acknowledge that. They say measures will be taken to minimize the impact, like introducing a new grade of egg at a reasonable price and stepping up enforcement against anyone trying to profiteer from this.
We'll have to see how that plays out. Has there been any immediate market reaction?
Oh, yes. Malaysian poultry stocks saw a jump today. Companies like Teosing Capital, Leon Hup, CCK Consolidated, Lei Hong, PWF Corp, they all saw gains.
Makes sense. Investors probably think this will help the producers' bottom lines.
Exactly. Analysts figure allowing them to pass cost changes on to consumers eventually will help sustain the industry.
Okay, a couple more quick Malaysian updates. Maybank has a new CFO.
Yes. Shafiq Abdul-Jabbar has been appointed Group CFO effective July 7th, 2025. He's coming over from AMAB Holdings.
All right. And Nestlé Malaysia, dealing with rising costs.
They are. They mentioned rising commodity costs, particularly cocoa and coffee, which impacted their Q1 profit. It dropped 17.5%, even though revenue was flat.
Ouch. So are they planning big price hikes?
They said they plan to limit price hikes in 2025, trying to hold on to their market position, but they added they might have to reconsider if costs stay really high. Focus for now is on efficiency and cost savings. They also mentioned the U.S. tariffs aren't expected to have much direct impact on them.
Okay, efficiency is key. And Tasco, looks like they hit a rough patch.
They did. Reported a net loss in their fourth quarter of FY 2025. It was actually their first quarterly loss after 19 straight quarters of profit.
Wow, what happened?
Weaker performance in both international and domestic segments. A key factor was a one-off write-off related to a warehouse facility they need for future expansion. Their full-year profit was also down significantly.
Any dividend.
Yes, they announced 1.25 cents per share. But they did warn about a more challenging environment ahead, given trade tensions and tariffs.
Right, those trade tensions keep popping up. Speaking of which, a collaboration in Sarawak for connectivity.
Yes. Reach 10 Holdings and Celcom Digi are working together. They plan to use satellite technology for backhaul to bring cellular coverage, specifically 4G, to underserved rural areas in Sarawak.
Satellite backhaul. That's a way to connect remote towers without laying fiber, right?
Exactly. Should be more cost-effective for those hard-to-reach communities. A good step for digital inclusion there.
Definitely. And finally, on the Malaysian front, an investment from South Korea.
Yes, Sistio, a South Korean company making advanced circuit boards, is doubling its production capacity in Penang.
Doubling. That's significant.
It is. They've completed a RM 326 million expansion, which is expected to create about 1,400 high-value jobs.
Good news for Penang and the semiconductor supply chain here.
Absolutely, especially for components used in smartphones and data centers. And they're already planning further expansion focused on AI applications.
Great stuff. Okay, let's shift gears now and look at some international news that could ripple back here. Australia first. Inflation concerns.
Yeah, their core inflation for the first quarter came in a bit hotter than expected.
So less chance of quick interest rate cuts from their central bank.
Pretty much. Market expectations for rate cuts this year have been scaled back, and the Aussie dollar strengthened a bit on the news.
And any trade noise involving Australia?
Well, President Trump flagged possible further talks with Australia about U.S. import levies. This follows that broad 10% tariff the U.S. imposed in early April.
So more uncertainty on the trade front. How big an impact are those tariffs expected to have directly on Australia?
Analysts think the direct economic hit might be limited. The bigger worry for Australia is actually the impact of those tariffs on China's economy, given how much Australia exports to China.
Right, the indirect effect. And speaking of China, how are they faring with these tariffs?
We're seeing some early signs of impact. Factory activity actually contracted in the latest reading, the fastest drop since December 2023.
Contraction already. Wow.
Yeah, and new export orders saw their biggest fall since April 2022. So it looks like the tariffs might be starting to bite.
What's the response been?
Major banks have lowered their 2025 growth forecasts for China. Beijing has talked about helping struggling firms, but we haven't seen really aggressive stimulus yet. President Xi is calling for the economy to adapt, with a focus on the next 5-year plan starting 2026.
Adaptation rather than massive stimulus for now, then. Okay, Thailand. They're also feeling the trade war heat.
They are. The Bank of Thailand cut its key interest rate again. That's the second cut in a row.
Second cut. Aggressive move.
And they signaled they're ready to do more if needed. They're worried about the slowdown from the global trade situation and potential U.S. tariffs on Thai exports.
Have they changed their economic outlook?
Significantly downgraded their GDP growth forecast for 2025. They're running different scenarios based on potential tariffs. It really shows how exposed some Southeast Asian economies are to these global trade shifts.
Definitely a regional concern. Now, the U.S. economy itself, what was that news about contraction?
Yeah, U.S. GDP actually decreased by 0.3% on an annualized basis in the first quarter. That's the first time it shrunk since 2022.
What caused the dip?
A big factor was a huge surge in imports, possibly businesses stocking up before tariffs hit. Consumer spending also moderated. Net exports ended up subtracting almost 5 percentage points from GDP growth.
So imports surged, exports didn't keep pace. But what about inflation over there?
That's the tricky part. Even with the GDP dip, core inflation, the PCE index excluding food and energy, actually accelerated to 3.5%.
Economy shrinks, but inflation picks up. That's not a great combination. Raises recession fears.
It certainly fuels those concerns, yes. Stagflationary signals almost.
Okay, a lot to unpack there. Finally, on the international scene, oil and gas markets.
Oil prices have been sliding. They're actually set for their biggest monthly drop in over 3 years.
Why'd the drop? Demand worries.
Yeah, concerns about the global trade war hitting fuel demand is a big part of it. Plus, there are fears about increasing supply.
Supply increasing. From OPEC plus.
OPEC Plus members are expected to consider another significant output increase in their upcoming meeting. Partly driven by Saudi Arabia pushing for compliance within the group, but maybe also influenced by U.S. calls for lower prices.
Interesting dynamics. And any news involving Petronas in the international gas market?
Yes, there are reports that Petronas is in talks with a U.S.-based LNG company, Commonwealth LNG.
For what?
To potentially buy at least 1 million tons per year of liquefied natural gas. Securing future supply, perhaps?
Right, and broader Southeast Asia and gas.
A report from Global Energy Monitor suggests the region might see the highest number of final investment decisions on new gas projects in a decade. This could boost gas output by around 18%.
More gas production. But that could make the green transition harder, right?
That's the potential downside, yes.
Yeah.
Locking in more fossil fuel infrastructure while trying to shift to cleaner energy, a real balancing act for the region.
Absolutely. Okay, that's a whirlwind tour of the global scene. Bringing it back home with all this news flying around, what stands out to you as the, let's say, most impactful or exciting news of the day for our listeners here in Malaysia?
I think it has to be the government's decision on egg price controls and subsidies.
The egg news,
Right,
yeah.
yeah.
Why that one specifically?
Because it's such a tangible shift with immediate effects and significant future implications. We saw the poultry stocks jump today, the market reacting instantly.
Right, investors seeing potential upside for producers.
Exactly. The prospect of being able to pass on costs, sustain their businesses better. But then there's the other side, the consumer impact.
Yeah, what happens to the price of eggs on the shelf, especially once subsidies are fully gone next August? That's the big question for households, isn't it?
It really is. Eggs are such a basic item. And this isn't just about eggs, is it? It ties into that whole broader government strategy of subsidy retargeting.
True. We've seen it with diesel, maybe electricity next, now eggs. It's a pattern.
It is. And each move forces us to think about the balance between government finances, industry support, and the direct cost of living for ordinary Malaysians. How these targeted subsidies, or lack thereof, shape the economy.
So it's exciting not just for the immediate market moves, but for what it represents in terms of ongoing policy changes and their real-world effects.
Precisely. It's development that directly touches producers, consumers, and government policy all at once. Lots to track there.
Definitely one to keep a close eye on. Well, that was a quick but hopefully informative look at some key developments.
Yeah, covering quite a bit of ground there, both local and global.
We hope this deep dive has given you a clear and concise overview of what's moving the markets and the economy.
And if you want to keep up with this kind of analysis and get regular updates,
Please remember to subscribe to the Malaysia Money Matters podcast wherever you get your podcasts. Thanks so much for tuning in today.
until next time. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.